Today, Robinhood reveals it's been subpoenaed by the SEC over its crypto business. Two major credit card firms reportedly paused their crypto push. And we examine the fight for crypto talent with Linch of Bittrex Global. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices reversed course from yesterday. As of noon Eastern, Bitcoin and Ether shot up nearly 1%, and Polygon rose more than 0.5%, trading at $1.23. Bitcoin and Ether were on pace to post a positive February, despite suffering a big mid-month drop as the broader 2023 risk rally began to fade. Okay, let's talk about the top stories. Robinhood has said it received an investigative subpoena from the SEC about a month after FTX filed for bankruptcy. That's according to the company's latest 10-K filing, which noted that the subpoena was related to listings of cryptocurrencies. Robinhood said it was specifically in relation to the supported currencies at its crypto trading subsidiary, as well as its custody of cryptocurrencies and platform operations. Earlier this month, Robinhood said it planned to buy back its shares from Sam Bankman-Fried's Emergent Fidelity Technologies, as prosecutors in the U.S. were in the process of seizing the shares tied to the disgraced crypto executive. Next, Coinbase has said it'll suspend trading of stablecoin Binance USD, or BUSD, next month because it no longer meets its listing standards. A Coinbase spokesperson told us the decision was based on the company's own internal monitoring and review processes. The crypto exchange made the announcement in this tweet yesterday, noting that the change will take effect on March 13th. In another tweet, the company noted customer BUSD funds will remain accessible and that they'll continue to have the ability to withdraw at any time. We reached out to Binance US. A spokesperson told us in part, quote, "Our team will continue to monitor the ever-evolving landscape to ensure we provide a safe and reliable platform to our users." Finally, major credit card companies are suspending some of their crypto plans. That's according to Reuters, which cited people familiar with the matter. Reuters reported that MasterCard and Visa are pausing their efforts to forge new partnerships with crypto firms following several high-profile collapses, including FTX's failure. According to the sources, the two credit card companies have decided to push back the launch of some products and services related to digital assets until there's more regulatory clarity and market conditions get better. MasterCard shared a statement with us, saying the firm continues to work with partners to bring relevant payment solutions and programs to market, guided by MasterCard's foundational principles in the digital assets and blockchain space. Further, the company's efforts continue to be focused on the underlying blockchain technology and how that can be applied to help address current pain points and build more efficient systems for consumers and businesses. In a series of tweets, Kai Sheffield, head of crypto at Visa, wrote this morning that the Reuters report is, quote, inaccurate as it pertains to Visa, and that the company remains committed to helping drive innovation of public blockchains in the payments ecosystem. A Visa spokesperson echoed that sentiment, saying as part of a statement that, quote, recent high-profile failures in the crypto sector are an important reminder that we have a long way to go before crypto becomes a part of mainstream payments and financial services. The spokesperson stressed the company continues to monitor industry and regulatory developments closely. All right, on to our main story. With crypto regulation in the spotlight after recent actions by the SEC, some in the industry are warning it could drive crypto talent and customers outside the United States. Crypto World's Jordan Smith spoke to Linch, the CEO of Bittrex Global, about how some countries are looking to entice crypto talent with less aggressive regulation.
All right, so let's set the scene by first just having you talk about how entrepreneurs and crypto businesses are reacting to this new tone from the SEC in regards to crypto. How is that affecting sentiment in the industry?
Well, I think the recent steps that the SEC has taken have to be seen within the context of the response to scandals last year, the FTX one being the most important, from jurisdictions, from regulators around the world. And what we've seen is policymakers and legislators in countries where action can be taken, realizing that actually getting to grips with crypto, regulating it is increasingly important. And actually, the crypto industry has perhaps too slowly come to that realization itself. We at Bittrex Global have been calling for proper crypto regulation for years. The only jurisdictions that have been doing it in a meaningful way are Bermuda and Liechtenstein, which is why we're regulated there. Now, the SEC, in some ways, one's got to feel sorry for them because they're only as good as the tools that they're given. And if you are, if all you're given is an act that was passed 90 years ago, then what are you supposed to do except try and fit things within that? And you have this kind of unedifying spectacle of trying to analyze what is crypto. Is it a bit like a security? Is it a bit like a commodity, a derivative? And the answer is no, it's none of those things. It's crypto. And the most successful regulatory regimes that we've seen are the ones that engage with crypto as such and regulate it as such. So the SEC enforcement stuff is, it's understandable, because if all you've got is a hammer, the whole world looks like a nail.
There are sort of two camps. There's the crypto business that says this is good, despite the risk of overregulation. We are seeing clarity, and we'll see more institutional adoption. Then you have the crypto entrepreneurs and businesses that say this is going to drive talent away from the United States because they might be going too far. If they are driving talent away from the United States, where are they going? Are they going to the EU? Are they finding developing nations that might offer more promise and maybe less oversight for them to grow their businesses?
Yeah, I think they are. And look, as Bittrex Global, one of the joys of being CEO of Bittrex Global is that we don't service US customers at all. So there are no US persons on our exchange. We don't allow access to Bittrex Global from within the US. So we are really net beneficiaries of that drive to talent if it does exist. And what we're seeing is those jurisdictions that have regulated crypto in a meaningful way are the beneficiaries of it. You mentioned the EU with its MiCA regulation, when that is finally adopted, and we're promised it will be any day now. But you've seen a whole bunch of initiatives in recent weeks and months. The UK has just announced a consultation, or just provided a consultation paper on creating a crypto regime. Hong Kong in the last couple of days. Dubai has announced VARA, which has now got substantive rules. BVI, all around the world, this competition is really hotting up. And I think a large part of that is, well, there's two things. There's a carrot and a stick. The carrot is people are excited about crypto. People realize that despite all the negative news and all the frankly fraud that has been alleged over the course of the last year or so, there's something fundamentally exciting and important about blockchain technology and about crypto that sits on top of it. And the carrot is, if we can do it in a meaningful and realistic way, we can grab a piece of that action. The stick is, if we don't do that, then we're possibly in a position that jurisdictions like the Bahamas now find themselves in, where they thought that they were kind of safe because they weren't doing anything. They were leaving well alone, and they realized that actually not doing anything is just giving the opportunity for bad actors to act badly. So what we're seeing is that the combination of the carrot and the stick, let's get a piece of that action, but let's also do it in a way that protects consumers, protects investors, operates fair markets, and fundamentally brings crypto into the mainstream.
Yeah, but if I take the skeptical view for just a minute, I mean, you mentioned the Bahamas and the way that they've maybe approached FTX or some of the other businesses that are headquartered there. And we saw in part that these businesses might have been headquartered there simply because they didn't have to follow so many rules that they would have had to follow in the US. We have US subsidiaries for FTX, for Binance, for others that are ostensibly safeguarded because they are following US regulations here. If I'm a customer, wouldn't that say to me that I don't want to use a business or an industry that is abroad, because we saw what happened in 2022 in part because they were abroad, and the businesses that are in the US seem to be safe?
Well, I'm not sure that that's how people around the world are viewing it. I think substituting one inappropriate regime for another inappropriate in a different way regime isn't particularly useful. What we're seeing is the best examples of how to protect people are, going back to what I was talking about earlier, crypto regimes that have been designed to actually address the issues with crypto. And so it's understandable that people who are familiar with US legal and regulatory regimes take some comfort in that. But when you have a regime that even the regulators themselves seem unsure on a day-to-day basis what is or is outside the scope, that are manifestly ambiguous at best on some of these things, that security of saying, oh, well, at least we're protected by US standards, I don't know how much comfort that really gives people. So sure, we should definitely move away from this, the status where people can play regulatory arbitrage and find themselves in jurisdictions where they have very little in terms of compliance obligations or legal or regulatory requirements. That needs to go. The time for that is over, as is the time for jurisdictions that claim that they have a regulatory regime, but actually when you look behind the substance of it, it's just fluff. right? And you get this ridiculous spectacle of people saying, oh, I have 486 regulatory statuses. Only 486, I've got 512. It's kind of pathetic trophies in the trophy cabinet. What's important is the quality of those regulatory statuses and the way in which they actually impact day to day on what businesses can do and how they do it. And I can tell you, like, we are regulated by two of the most robust regulatory regimes in the world, in Liechtenstein and in Bermuda, and more importantly, by regulators that really know how to supervise, how to regulate, and how to enforce.
Okay, that's all for Crypto World today, but we'll be back again tomorrow. We'll see you then.